AFX sits at $0.1038, and for most people that number looks small, almost unimportant, the kind of price the wider crypto world scrolls past without thinking. But the people who actually understand cycles, regulation pressure, supply shock economics, and the psychology of accumulation can already feel the shift beneath that tiny number. It's the point in the chart where a project hasn't exploded yet, but the pressure building behind it is already visible in the behavior of early movers, in the tightening of liquidity pockets, and in the way community discussions suddenly turn from doubt to observation. What makes this moment so critical is the combination of low price and high structural readiness. AFX is no longer in its experimental infancy. The ecosystem, the leadership communication style, the regulatory alignment moves, the staking model and liquidity architecture, everything is sitting on the launchpad quietly, and that's exactly why $0.1038 is not a reflection of weakness. It's a reflection of early-stage compression. Every powerful run begins at the point where most people underestimate what they're looking at. When a token re-enters the 10-cent range with rising confidence, what you're really seeing is accumulation from people who stopped caring about noise and started studying structure. These aren't hype buyers. These are the investors who watch how the price behaves under pressure, noticing how it refuses to break lower, how every dip gets absorbed faster, and how volume spikes appear at off hours when whales test liquidity. They don't announce themselves. They don't hype anything. They accumulate quietly because they've seen this pattern before, during early BNB, during early CRO, during pre-regulation Matic. Every major breakout cycle started with a period of disbelief where only a minority realized what was forming. And AFX is showing all the signs of entering that silent accumulation window. This is the point where community maturity becomes more important than temporary price movements. And the people still watching from the sidelines often realize too late that the window for cheap ownership has already started closing. What makes this moment unusual is that AFX is approaching its regulatory milestone at the same time its price sits low enough to create asymmetric opportunity. Normally, projects explode in price first and chase regulatory structure after, which means early holders rarely get the advantage of buying before compliance steps in. But AFX is flipping that pattern. It is building compliance signaling before the run, not after. That changes the psychology entirely. If Hong Kong approval moves forward in the way conversations suggest, then this price, 10 cents, will be remembered as the period the majority overlooked. Regulatory clarity transforms any asset into something institutions can interact with. And institutions don't chase hype. They chase compliance, stability, auditing, and long-term revenue models. From a structural perspective, AFX aligning with Hong Kong's digital asset framework at its current market value creates one of the most unusual asymmetries in the entire AI DeFi sector. There is also a psychological transformation happening inside the community itself. Earlier this year, people asked whether AFX would survive. Now they're asking a different question. How large can this ecosystem become once everything synchronizes? That shift, from fear to cautious optimism, is the earliest indicator of sentiment reversal. And sentiment reversal almost always precedes market reversal. The introduction of new holders who are no longer afraid to accumulate, the return of long-term believers who previously hesitated, the increase of community speculation focused on fundamentals rather than hope. These are the precursors of a new phase. AFX is no longer being discussed as maybe it will recover. It's being discussed as what happens when Hong Kong approves and the CEX listing activates liquidity across markets simultaneously. That type of conversation doesn't appear during weak phases. It appears right before structural expansion. The stability around $0.1038 is another signal that the market is recalibrating. Earlier dips were sharp and emotional. Now dips are shallow and slow because the token behaves differently when liquidity holders mature. Volatility decreases, which is exactly what regulators prefer and exactly what institutions wait for. The irony is that retail investors often view stability as boring or stagnant, while large financial players see stability as readiness. When an asset stops crashing on every piece of negative sentiment and instead begins absorbing fear without collapsing, it signals that stronger hands are quietly taking control of the supply. And once stronger hands hold most of the supply, the ability for the price to fall dramatically disappears. In crypto, this stage is known as the pressure build, the coil before the expansion. No explosion happens without compression first. Another factor shaping the next phase is the evolving behavior of the leadership teams behind AFX. Where other projects deliver excitement, AFX leadership delivers structure. Where others give hype, AFX gives gradual confirmation. This frustrates some people who want instant announcements. But long-term investors recognize that the most successful ecosystems rarely operate with hyperactive communication. They move quietly, document everything, follow procedure, and let the momentum build through actions instead of noise. That's what gives institutional entities confidence, professional silence, not public excitement. And because AFX is keeping its operational layer tight and controlled while the price remains low, it puts early holders in a position where the upside is significantly larger than the downside. This is the key reason why $0.1038 is not a price to overlook. It's a price that exists only because most people have not yet understood what structural transformation looks like before it happens. You're witnessing foundation setting disguised as stagnation. What most retail investors fail to recognize is how predictable this stage is in projects that later break into the mainstream. Everything looks quiet, almost dull. Price movements are small. The community is cautious. The developers speak carefully. But beneath that surface is where liquidity architecture changes. Whales accumulate invisibly, cold wallets grow, token movement slows, staking participation increases, and supply begins to leave exchanges. These behaviors always appear before a price surge because markets move long before the charts reflect it. And AFX is now showing every single early indicator. Slowed volatility, higher confidence, deeper staking, consistent buy pressure at key levels, and volume arriving at strange hours that only seasoned traders recognize as pre-positioning. This is not a weakness phase. This is a restructuring phase, the kind that always precedes a breakout. The most compelling signal right now is the shift in holder psychology. This is something you can't see on the chart, but you can feel through behavior. People who once said, "I'll wait and see," are now dollar cost averaging quietly. People who used to panic at every dip are now holding through volatility without fear. That shift is critical. Market movements are driven by psychology more than math. And when nervous holders transform into confident holders, supply shock begins. Suddenly, the token becomes harder to buy in size. Suddenly, dips are no longer deep. Suddenly, every moment of fear becomes a buying opportunity for smarter investors. And once that psychology spreads across a community, the price begins to rise not because of hype, but because of structure, because people refuse to sell at cheap levels anymore. That's exactly the behavior AFX is beginning to show. Now, bring the CEX listing into this equation, and everything becomes more extreme. The Hong Kong regulatory framework is structured in a way that rewards long-term projects that follow compliance pathways, maintain stable liquidity, and show predictable leadership. AFX is positioning itself for that exact model. If the approval process moves forward and the listing becomes official, then the liquidity that enters the ecosystem will shift from community-driven to institutionally enabled. This is where price discovery changes exponentially. CEX listings don't only add volume. They add legitimacy, which attracts regional investors who previously avoided the token. And Hong Kong is not a small market. It's the gateway capital of Asia's digital asset economy. If AFX enters that ecosystem while still sitting near 10 cents, the shock to the order books will be dramatic. Demand will not meet supply. Supply will collapse under demand. This is where the real asymmetry forms. At $0.1038, the token is positioned so low that even a modest wave of new liquidity could push it into a higher band simply due to lack of available sell orders. When you combine that with existing holders refusing to sell at cheap levels, the early stage run becomes almost inevitable. It becomes a mechanical reaction rather than a speculative one. People often think a bull run happens because everyone gets excited. That's wrong. A bull run happens because supply dries up at the exact same moment demand increases. AFX is approaching that exact configuration. Every structural indicator, supply compression, accumulation behavior, regulatory signaling, stable leadership, upcoming liquidity injection, points to the same direction. The community is also beginning to unify around a single narrative rather than being split into doubt versus hope. That unity is powerful because it prevents fear selling. When holders believe in the next phase, selling pressure decreases dramatically, which stabilizes the price around accumulation zones. And once fear selling disappears, only two forces remain: accumulation and anticipation. That's when a token becomes primed for expansion. And AFX is right there now, holding steady at a price that doesn't match its structural progression. The market isn't reacting yet because most people don't see what's happening beneath the surface. But early investors can always feel the shift before the crowd does. Meanwhile, the development pipeline is preparing the ecosystem for scalable utility. This is another factor that gets ignored when prices are low. But utility is the backbone of long-term project growth. Without utility, hype burns out fast. With utility, hype becomes sustainable. AFX is building AI-integrated trading, DeFi mechanics, cross-market tools, and structural liquidity modules at a time when the price is still low, meaning the market hasn't priced any of it in yet. This is the most favorable moment for any investor, when fundamental strength appears before price movement. When utility exists before recognition, that is the window that creates the largest wealth gaps between early and late buyers. And AFX is currently sitting at the beginning of that window. The next few months will define the future of AFX more than the entire period before it. A confluence of events: regulatory confirmation, the Hong Kong listing, liquidity expansion, community transformation, utility rollout, will collide with a price that still suggests early stage, not mature stage. This imbalance between value and valuation is where the opportunity lies. And once the market finally realizes how mispriced AFX currently is, the correction will not be slow. It will be violent, fast, and unforgettable. People will say, "I should have taken 10 cents seriously when I had the chance." But that window doesn't stay open forever. Price movement always arrives after the fundamentals, not before. And the fundamentals are no longer forming. They are aligning. Liquidity dynamics are entering a phase that only experienced traders recognize, the silent tightening before expansion. This is where the token begins shifting from being freely available on the market to being gradually locked away in wallets that have no intention of selling until after key catalysts hit. AFX is now approaching that stage with unmistakable clarity. The amount of freely circulating tokens is shrinking. Long-term wallets are growing. Volatility is flattening not because interest is gone, but because holders are refusing to hand over their tokens cheaply. This tightening of supply is a precursor to every significant breakout in crypto history, and it is happening right now, while the price remains at $0.1038. The general public sees this as stagnation. Experienced investors recognize it as preparation. The psychology surrounding AFX has also shifted in a way that cannot be undone. Early communities often experience doubt, division, and conflicting narratives before a token stabilizes. But once confidence returns alongside structural progress, a unified sentiment begins to form. And AFX is now in that phase where the community is starting to align behind one shared belief that something much bigger is coming. This matters more than people realize. Confidence doesn't just influence sentiment, it influences behavior. Fear-based selling dries up. Long-term holding becomes the standard. These behavioral shifts are the foundation of price stability and upward movement. When a community stops selling below what they perceive as fair value, the price becomes anchored. And that anchor is forming at roughly the 10-cent zone. Asia's role in this next stage is also far more important than people understand. Hong Kong's regulatory environment is not just permissive, it's strategically designed to position the region as a global digital asset hub. Being listed on an Asian exchange means being introduced to a massive pool of investors who are comfortable with emerging tech projects, eager for opportunity, and known for pushing early-stage tokens into accelerated adoption. And because AFX is aligning itself with the Hong Kong listing pathway, the token is preparing to enter a market that historically moves faster, louder, and more aggressively than the Western retail environment. If the listing becomes official, the price will not simply rise. It will enter a new price discovery phase entirely, one driven by liquidity that the current market cannot anticipate. Scarcity engineering is another factor that most retail traders underestimate. When developers intentionally design supply mechanics that create controlled scarcity, the market becomes more responsive to demand. AFX's upcoming staking, utility modules, and cross-chain integration will each reduce the amount of unlocked, sellable tokens circulating on exchanges. This reduced supply acts like a pressure chamber. Every small increase in demand creates disproportionately large jumps in price because the order books become thin. And while many tokens implement these mechanics too late, AFX is implementing them early, before a major listing, before mass community adoption, before new liquidity arrives. This timing is perfect. It creates an environment where supply cannot keep up with demand once the catalysts begin firing. What's even more interesting is the behavior of mid-level holders, wallets that hold neither tiny nor massive amounts, but enough to influence price direction. These wallets are becoming more stable, showing longer holding times, fewer panic actions, and more strategic buys. This mid-tier cohort is the heartbeat of a token's ecosystem. Whales move slow and small holders panic quickly, but mid-level holders create the real sentiment wave. And in AFX, these holders are now anchoring the price by refusing to sell under 10 cents. That refusal fundamentally strengthens the market floor. It signals confidence not based on hype, but on evidence. Evidence of progress, evidence of structure, evidence of momentum. Combine this with accumulation patterns, and something powerful emerges. Early-stage institutional-style behavior. The quiet buys at off-peak hours. The systematic stacking on dips. The repeat purchases that don't chase pumps, but wait for consolidation. These are not amateurs. This is strategic positioning ahead of a major shift. And with the Hong Kong listing on the horizon, these buyers know what they're preparing for. This is how wealth is often made in crypto, by entering while the majority hesitates, by accumulating when prices are still grounded, and by positioning before announcements, not after. AFX is giving the market that exact window right now, and windows like this do not stay open long. As the ecosystem expands, new utility layers begin shaping long-term value creation. AFX is not building a one-dimensional use case. It is expanding into AI-driven trading systems, cross-market tools, DeFi liquidity integration, and staking architecture. These layers create real demand. They create reasons for people to buy, hold, and use the token beyond speculation. And the market always rewards utility over hype. Utility sustains price. Utility builds trust. Utility turns early investors into long-term supporters. And AFX is implementing these utility systems while still priced as if it's a speculative meme coin. That mismatch between value and valuation is rare, and incredibly profitable for those who recognize it before the crowd does. The next stage of AFX's evolution hinges on convergence. Market psychology, regional demand, scarcity mechanics, ecosystem utility, and major exchange access are all aligning at the same time. This is not random. It's structural. Tokens rarely achieve this level of alignment before becoming mainstream. And because AFX is currently overlooked by the larger market, this creates an opportunity that will not exist later. Once the Hong Kong listing becomes public, once trading volume jumps, once liquidity flows in, and once the price begins climbing in rapid waves, the quiet accumulation phase will be over. People will no longer be buying at 10 cents. They'll be chasing higher prices, wondering why they didn't act sooner. This is the moment where early conviction becomes future profit. And every signal, every structural, psychological, and market-based indicator points to the same truth. The current price is temporary. This phase is temporary. The consolidation is temporary. But the upward shift triggered by the upcoming catalysts will be permanent. AFX is on the edge of transition, and those who understand this stage will benefit the most when the next phase begins. Everything now comes down to the final convergence, the moment when all the pressure built during months of accumulation, development, and community resilience is forced into a single directional breakout. AFX is approaching this moment faster than most holders realize. The price at $0.1038 is the last calm before institutional-style liquidity begins reshaping the chart entirely. This is not speculation. It is visible in the market structure. The token is hugging a tightening range, volatility is compressing, sell walls are thinning, and buy pressure is becoming more methodical. These are the behaviors that always occur before a decisive upward move. And once the Hong Kong listing or any other large catalyst hits, the consolidation phase instantly ends. Price discovery begins. Momentum takes over. This is how small tokens transition to major players in a very short period of time. The global market shift toward Asian exchanges will be one of the most defining forces behind AFX's next phase. Hong Kong carries regulatory legitimacy, liquidity depth, and an investor base known for aggressive early adoption. When AFX enters this environment, it will not be another low-volume coin lost in the noise. It will be a fresh listing with a structured ecosystem, real product development, and an active international community. Asian retail doesn't hesitate the way Western retail does. They move fast when they see opportunity. And a sub-$0.20 token with active staking, AI utility, and upcoming CX expansion is exactly the type of project they move into quickly. If even a small fraction of this liquidity hits AFX, the price will not increase slowly. It will jump in steps. That is how tokens break out of small cap status and enter mainstream traction. The community's transformation is equally important. While weaker projects lose their base during downturns, AFX has done the opposite. The core community has hardened. Holders now understand the token structure, the roadmap, the liquidity mechanics, and the long-term vision. This creates a psychological shift where selling becomes less likely and long-term conviction increases. When a community reaches a point where its holders no longer react emotionally to dips, the token becomes incredibly difficult to push down. That stability is exactly what potential exchanges look for. No exchange wants a listing that collapses the moment volatility hits. AFX is proving through every consolidation phase that its price stability is not artificial. It's community-driven, data-supported, and structurally reinforced. Another major pressure point is staking. Staking does not simply create passive income. It removes tokens from circulation. Every token locked into staking reduces the available supply for traders. With widespread staking adoption, the circulating supply becomes so thin that price can be pushed upward with minimal capital. This is why staking periods often align with breakouts. And with AFX rolling into a stage where staking becomes more attractive, the supply shock effect will become increasingly visible. At a price of $0.1038, the market still behaves as if unlocking events will flood liquidity. But the opposite is happening. Supply is decreasing. Liquid tokens are becoming scarce. And scarcity is the engine that multiplies price impact. Behind the scenes, exchange accessibility is being quietly engineered. Even before a major listing goes live, liquidity providers test markets, optimize token routing, and prepare volume channels. This silent preparation is often misunderstood as stagnation. It is not. It is the formative stage where the foundation for high-volume trading is being laid. Once the listing officially activates, liquidity providers immediately push volume through the new exchange, tightening spreads and creating the illusion of instant growth. But the truth is that preparation happens long before launch day. AFX is in that preparation phase right now, which is why the market has felt unusually calm. Calmness before liquidity expansion is one of the most reliable signals of an upcoming price acceleration. Investors often underestimate how quickly sentiment can flip. Today, the narrative is still quiet. Maybe it will go up. Maybe the listing will happen. Maybe the devs will deliver. But sentiment does not change gradually. It flips instantly. One announcement is enough to push thousands of investors off the sidelines. One listing is enough to convert waiting buyers into immediate buyers. One new exchange pair is enough to trigger volume spikes that break resistance levels effortlessly. When this happens, there is no time to enter at low levels. By the time the majority decides to act, the price has already moved. AFX at $0.1038 is not a long-term resting price. It is a pre-announcement price, a pre-liquidity price, a pre-acceleration price. And investors who recognize this early are the ones who benefit the most. What's unfolding now is a classic setup: compressed volatility, increasing confidence, reduced supply, rising long-term holders, upcoming major exchange pathways, and a global crypto market preparing for a 2025 expansion cycle. All these elements align into a single direction. The question is not whether AFX will move. It is how aggressively it will move once the spark is lit. This phase is temporary. The price is temporary. But what comes next, new liquidity, new exchanges, new utility layers, and a stronger global community, will define the token's long-term trajectory. AFX is moving toward the breakout zone. The window to accumulate quietly is closing. When the catalysts hit, the token will begin a new chapter, one driven by momentum, exposure, and demand that dwarfs anything seen so far. The story is only beginning, but the foundation is already in place. Holders who understand this final stage are positioning themselves now, before the shift, before the listing, and before the price enters a phase where 10 cents will look like a forgotten opportunity.